Hey everyone, welcome to today's video. Today's topic is a bookkeeping certification model test. In this video, I will try to give you an basic idea regarding bookkeeping certification, what's the questions type, and what you need to be clear about which concept you have to focus on more, though it's not certain. The exam might be comes from other topics, but these are the basic things that you must need to know so that you can crack the exam. So I hope you will enjoy this video. Let's get started. Disclaimer: this educational video contains original practice scenarios created independently to teach bookkeeping principles. It's not affiliated with, sponsored by, or containing proprietary content from Intuit or others. Okay, so we can start with the part one. That is approximately 10 questions from accounting fundamentals and accounting equations. So the first one is Luna's Bakery purchases 8,000 of kitchen equipment using cash from its bank account. What is the net impact of on the accounting equation? The answer should be B. B is the correct answer because equipment asset increased by 8,000 and cash asset decreased by 8,000. Both accounts are asset and total asset remains net zero. Then the next question: if farm purchases 2,500 of office supplies on trade credit, now how does this transaction affect the accounting equation? So the correct answer is A, because office supplies is assets that increases and accounts payable is liabilities that increases. Equity is unaffected until the supplies are actually consumed or expended. Then question number three: the founder injects 20,000 of personal savings into the business checking account. What is the effect of the accounting equation? Three number correct answer is B. Asset increases and owner's equity increases because asset increased by 20,000 cash and owner's capital or equity increased by 20,000. Then question number four: true or false? Buying a raw merchandise for inventory on 30-day vendor terms increases owner's equity because cash has not yet left the bank. The answer is false because purchasing inventory on credit increases inventory assets and accounts payable liability. Equity does not change until inventory is sold and cost of goods sold is recognized. Then question number 5. Apex Consulting pays 3,000 cash to clear an outstanding vendor invoice. What is the effect on accounting equation? And the answer is A. Assets decreases and liabilities decreases because paying cash reduces cash assets and settles accounts payable liability. Okay, then next question is question number 6. Which of the following items directly increases the retained earnings balance at period end closing? And the correct answer is B, net income. Because at period end closing, net income revenues minus expense is transferred into retained earnings, increasing total equity owners draw and dividends decrease equity. Then question number 7. If total company assets equal 1,50,000 and total owners equity equal 90,000, what is the total value of liabilities? So the correct answer for 7 is C, 60,000, because using accounting equation assets equal to liabilities plus owner's equity, where we can reorganize the formula and we, from 1,50,000 we can deduct 90,000 and get the 60,000, which is the liabilities. Then our next question is question number 8, which is an owner takes out 1,500 cash from the business account and for personal living expense. How does this affect the accounting equation? So the correct answer is assets decrease and equity decrease, because owner draws lower cash assets and reduce owner's equity via the owner's drawing account. Okay, then question number 9. Sales revenue transactions increase total assets or lower liabilities and increase owner's equity. The correct answer is true, because earning revenue increases assets and increases net income, which ultimately increases the owner's equity. Question number 10. A client pays 4,000 retainer in advance for consulting work scheduled for next month. What is the immediate effect on the accounting equation? The correct answer is B. Assets increase and unearned revenue increases, because receiving cash upfront increases cash asset because the service has not yet been rendered. The business records a liability called unearned revenue. Okay, then the next part is related to asset classification and depreciation. Question number 11, it's related to true false. The question is the following statement true or false? Land purchased for a retail store location is a fixed asset and should be depreciated over a standard useful life. And the answer is B, false, because land used for business operation is long-term asset, but land is never depreciated because it has an indefinite useful life. Question number 12 is, which of the following is categorized as current asset on a standard balance sheet? So the answer would be B, accounts receivable, because accounts receivable represents short-term amounts due from customers expected to be collected within 1 year, making it a current asset. Okay, question number 13 is, courier service buys a delivery van for 35,000 with an estimated salvage value of 5,000 and a 5-year useful life. Using straight line depreciation, what is the annual depreciation expense? So the answer for 13 is B, 6,000, because from 35,000 we need to deduct the salvage value of 5,000, then the rest of the 30,000 we divide by 5 years, then we will get the 6,000 amount, which is the correct answer. Then question number 14, true or false? Accumulated depreciation is a contra asset and account with a credit balance that offset the cost of fixed asset on the balance sheet. And the For answer is true, because accumulated depreciation carries a credit balance and offset the historical cost of property, plant, and equipment on the balance sheet. Then question number 15, which of the following long-term asset is never subject to depreciation or amortization? And the correct answer for 15 is C, operating land, because land does not wear out or lose utility over time, so it is not subject to depreciation or amortization. And the question number 16 is, if specialized machinery was purchased for 60,000 and has total accumulated depreciation of 22,000, what is the net book value? So the correct answer is C, 38,000, because from the historical cost we need to deduct the accumulated depreciation, then we will get the net book value 38,000. Okay, then question number 17, when entering monthly depreciation on computer equipment, which account receives the debit entry? So for depreciation, the answer should be C, depreciation expense, because the journal is depreciation expense debit and accumulated depreciation expense credit. So we debit the depreciation expense. Then question number 18 is a 2-year prepaid insurance contract classified as long-term fixed asset like property, plant, and equipment? And for 18, the answer is no, because prepaid insurance is classified as prepaid asset or current asset, not a fixed asset like property, plant, and equipment. Then question number 19 is construction cost incurred to build a new corporate warehouse. Materials and direct labor should be the correct answer here, should be option B, that is capitalized as part of the asset cost on the balance sheet, because all expenditures directly required to bring a fixed asset into service, like materials, labor, and site preparation, must be capitalized into assets cost balance on the balance sheet. Then question number 20, intangible assets with finite useful lives such as software, patents, are reduced over time, though the correct answer for 20 is C, amortization, because intangible assets like patents, copyrights, and trademarks are systematically written off over their legal useful life using amortization. Okay, then we are going to the next part, which is related to accrual accounting, matching principle, and payroll basics. And the question number 21 is, under the matching principle, if a team earns performance commission in November 2025 but payout occurs in January 2026, then when should the expense be recorded? Okay, for 21, the answer is B, November 2025, because under the matching principle, expenses must be recorded in the period when employees' efforts generated revenue, like November 2025, regardless of when the cash is paid out. Okay, then question number 2022 is, which of the following scenarios results in an accounting entry in a company's cash basis payroll system? Okay, here the correct answer for 22 is B. The court ordered child support payments withheld from wages, because wage garnishments deducted and remitted during payroll represent active employer cash disbursement recorded on cash basis book. Personal HSA debit card spending occurs independently of employer payroll operations. Then question number 23. Under full accrual accounting, when should sales revenue be recognized? The correct answer for 23 is C. When the performance obligation is satisfied, like goods delivered or service rendered. Because under accrual accounting, revenue is recognized when goods or services are delivered to the customer, not when cash is collected or when invoices are printed. Okay, for 24, An annual commercial lease of 24,000 per month. 2,000 is paid in full on January 1st under accrual accounting. How much rent expense is recognized on January? Okay, for 24, the answer is B, 2,000. The remaining 22,000 is held on the balance sheet as prepaid rent. Okay, then 25, true or false. In a purely cash basis bookkeeping system, formal accounts receivable and payable ledgers balances are maintained on financial statements. Okay, for 25, the answer is B, false, because cash basis accounting track cash inflow and outflow only. It does not maintain formal balance sheet accounts for accounts receivable and accounts payable. Okay, then question number 26 is an adjusting journal entry made at period end for earned but unpaid staff wages requires. The answer for 26 should be B, debit wages expense, credit wages payable, because accruing unpaid wages at period end increases wages expense and increases wages payable as well. Okay, for 27, an adjusting journal entry made at period end for earned but unpaid staff wages requires. The 26th answer is B, debit wages expense, credit wages payable. And the question number 27, which payroll tax component is funded exclusively by employer, not deducted from the employee paychecks in the US? The answer for 27 is federal unemployment tax, FUTA, because FUTA is funded 100% by the employer. Federal income tax, social security, and Medicare are withheld from employee paychecks, though employers match social security and Medicare. Okay, for 28, advanced deposits paid by clients for upcoming custom fabrication work are classified as. The 28, the current answer is B, unearned revenue or current liability, because upfront customer deposit represent an unperformed obligation which is reported as unearned revenue. And for 29, when a business repays its advertising bill 6 months in advance, the transaction initially increased as asset account. For 29, the question is 2, because prepaying advertising in advance creates an asset that is gradually expensed over time. And for the 30, the main objective of the accounting matching principle is to, the answer is B, record expenses in the same period as the revenue they help to generate, because the core purpose of the matching principle is to align cost directly with the revenues earned in the corresponding accounting period. Okay, we are going to the next part, that consists of your bank reconciliation, financial ratios, and statement analysis. And the question number 31 is Apex Supplies has an unadjusted check register balance 6,200. The monthly bank statement shows 100 in unrecorded interest earned and 50 in unrecorded bank fees. Outstanding checks total 800 and deposits in transit total 1100. What is the adjusted book balance? So here the adjusted book balance should be the A. A is the correct answer, because outstanding checks and deposits in transits adjust the bank statement balance, not the book balance. For book balance, we need to record interest revenue and bank fees. Okay, for 32 is, which of the following is primary source of document used to confirm deposits in transit during a monthly bank reconciliation? For 32, the question answer is B. That is bank deposit slips or receipt, because deposit receipt provide direct verification of cash fund submitted to the bank to substance deposit in transit. Okay, then question number 33 is, using standard balance sheet reconciliation procedures, which of the following accounts should be reconciled monthly against an external vendor bank statement? And the 33, the correct answer is B, credit card payable. And 34, true and false. The final step in completing a bank reconciliation is matching clear transactions against bank statement lines. And for the 34, the answer is false because matching cleared items to bank statement is an intermediate step. The final step involves recording necessary adjusting entries like fees, interest, NSF checks, and finalizing the reconciliation report. And for 35, a boutique fitness studio reports 50,000 in total liabilities and 1 lakh in owner's equity. What is the debt equity ratios? Okay, for debt equity ratios, we know that total liabilities divided by total owner's equity. So the answer should be 50,000 divided by 1 lakh equal to 0.05. The answer is B. Okay, for 36, analysis of multi-year income statement shows year 1 net income minus 5,000, year 2 net income 12,000, year 3 net income 4,000. Is it correct to claim the companies show as consistent increase in net income over time? And for 36, the answer is no, B. Okay, then 37 is uh, in a monthly bank reconciliation, how are outstanding checks handled on the bank reconciliation schedule? 37, answer is B, deducted from the ending bank statement balance. Okay, for 38, if a business holds 80,000 in current assets and 40,000 in current liabilities, what is its current ratio? The current ratio is current asset divided by current liability. So 80,000 divided by 40,000 is 2. The answer is B. And for 39, an NSF non-sufficient fund or a bounced customer check returned by the bank is recorded on the bank reconciliation as the question. The answer should 39 would be C, the deduction from the company's book balance.